Hey guys, Paul Colomag here, and today we're going to be taking a look at how not to trade. This is from my own experience, and although this isn't as crazy as some of the trades you might see on Wall Street Bets, it's pretty significant, and there's a lot to be learned from the trades that I was making, the money I was losing, and just overall the experience of having your account depreciate 5% in value over the course of 3 days. But again, this goes to show what I say in every video, that I'm not a financial advisor. This is just my opinions, you guys. I can be wrong, as anyone on the internet can be. And before we get started, I'd just like to point out, I'm currently at my grandma's house, and that's why the scenery is different than usual. But yeah, if you guys end up enjoying the video, please drop a like for the YouTube algorithm. Subscribe for more content like this. And with that out of the way, let's get right into it. So when I just got Robinhood, I got a free stock that was worth a crazy $4.22.
Oh my god! Wow!
So that doesn't even really matter. After that, my first trade was me buying a Cisco call and selling it in 15 minutes for the same exact price. The reason that I did that was A, paper hands, B, I didn't trust my own analysis, and C, it was impulsiveness. Overall, me entering that trade to begin with was pretty impulsive because the evidence for Cisco going up was pretty weak. My analysis wasn't really strong, but I really wanted to enter just some trade. So I impulsively entered this trade, which made me impulsively exit it 15 minutes later. Then I put $200 into UGAS. The reason I did this was because UGAS appeared like it was about to go to $30 a share when I bought it at $20 a share because of the previous repeating patterns. But this is an important lesson, that patterns tend to repeat themselves, but they don't always repeat themselves. And I made another huge mistake with that as soon as I saw UGAS starting to go down just a little bit, I started to average downwards, and I started doing that way too soon. I started averaging down when UGAS only went down like 20 cents. So my averaging down was insignificant, other than in the fact that it was increasing the risk of me losing all my money. So yeah, I impulsively traded on that trade. I was doing pretty bad, and I had to cut my losses when it was down $50 or 1.6% of my entire account. The day after that, I made my first profitable trade, which was a Cisco call day trade. I bought it and sold it 15 minutes later for a $14 profit, which is pretty insignificant considering the damage that I did prior to it. But this is the first example of me trusting my own analysis and actually holding until I saw it to cut profits. I still think that I sold it far too early and I could have pulled out more profits. It just didn't seem realistic to me that after 2 days of trading, I would finally make a profitable trade. And I just wanted to secure whatever little money that I already had. And then lastly, that same day, I know a lot of trades in one day, I bought a SPY call and I sold it 5 minutes later for a $2 loss. And that was just so stupid, so impulsive. I had great analysis on SPY and I really thought that SPY would go up. But as soon as it started going against me, I panicked, I sold. But it's just so stupid because if I had held it to the next day, my SPY call would have been 200% profitable. I bought it for around $200 and I could have sold it for $500, $600 even. But I was afraid. I had toilet paper hands and I folded. I just panicked, I was impulsive, and those are not good traits that you want to have when you're trying to trade. Hey guys, Editing Paul here. So first of all, yes, I am home. Second of all, I had a bunch more trades in the video, but I ended up cutting them out because nobody got time for that. I just jumped to the conclusions after this trade, even though there was a couple that followed it. So after these couple of days of terrible trading, I realized that I needed to do some self-reflecting, some thinking, just realize what was I doing wrong. And through that, I came up with a couple of almost rules, just really suggestions that you should always keep in your mind while trading. And these suggestions really can help you save a lot of money in the long run. The first rule is that you should always do your own research. Even if this is the person that you trust the most, this is your mom, this is your dad, this is Elon Musk himself saying to short Tesla stock. You always want to do your own research. Never go off what another person said. Always do your own research first, or else you will lose money. The next thing I realized that you should do is to trust your own analysis. When you analyze something and you realize that, oh, this should go up over the course of the next week, there's a lot of good things happening to their fundamentals, their technicals, everything just looks bullish, and the next day it goes down, you should still believe your analysis. You should have confidence in yourself and stick with your trade. With that being said, however, that is different than just not managing your risk and ending up losing a bunch of money because you were overly arrogant. You need to manage your risk, and you need to make sure that if a trade is approaching 5% loss, 10% loss, that you either cut your losses or you average down, and that really depends on how confident you are in that trade. But in general, if you guys want me to make a video on trade management, I'd be glad to do so, and let me know in the comments. On that same comment about risk management, you need to make sure that you don't put more than 5, 10, 15 max % of your account into one trade. That's because if that trade ends up going south, you'll lose your entire account, which is no fun ever. It's really not a fun thing to go through, and you need to manage your risk. Such an important thing in trading. But with all that being said, these are really theoretical rules that you should just keep in your mind rather than specific things to apply to your day-to-day trading. And these are just things that, they're not rock hard rules, they're not very specific, but they're just concepts that you should always refer to when you're trading. These things, I promise you, if you follow these rules, if you abide by these rules, they will end up saving you a bunch of money in the long run. And even though it is common sense for many, common sense isn't so common, as you saw with me. If you guys ended up enjoying this video, then make sure to like and comment if you guys enjoyed, just to let me know, and subscribe for more content like this. But with all that being said, I'd just like to thank you guys for watching, and until next time.